Everybody, my name is Ray McDonald. I am the Chief FX Market Strategist for Traders Way. Welcome to our daily Forex trading strategy session. Today is what? Is it Tuesday? I think it is. January 13th, 2015. Today we're going to trade what? We're going to look at setups on Euro USD, USD. We might look at USD yen. There's a setup right now on pound dollar. Aussie dollar looks pretty good. There's a lot going on. Let's get this party started. Booyah. Busy, busy, busy. Lots of things going on. No time to waste. Let's get this out of the way. Hey, check it out. Euro Swiss franc, still nothing. Don't you love it? Look at that. Wow. Incredible, huh? When was the last time you saw that? All right, let's get to some price action. Real nice one today on Kiwi dollar. Okay, let me review this here. Let's go farther back though. Yeah, you got to see yesterday's price action. Okay, does this look bullish to you or bearish? On a trading day like this, how do you set this up? Okay, one message I keep delivering is you cannot sell low. You can't sell low. You can't sell low. You can't sell low. You got to sell high if you're a bear. But that looks bearish. Consider that a bearish engulfing candle. Next thing you should do is look for psych levels on the pullback. This is 78,000. In fact, let's just make sure it's perfect. Okay, let's adjust it. 78,000. Okay, so it dropped through a psych level, pulled back, did a reversal. The other thing that you could do, and I do this for any swing trade overnight, is I take the previous day's low, if it's a bearish trend, right? Previous day's high, and I look for a trade opportunity that has two things in it. One, somewhere in my sweet spot, which is somewhere between the 382 and 618 Fibonacci retracement. Okay, of course, now I can't grab this little thing. Come on, man. Okay, so that's the sweet spot. Right in the center of the club face, right? If you're a golfer. Let's try to get that in there a little better. Okay? Sweet spot. Okay, and the second component is ideally you hit the sweet spot, you know, let's say 90 minutes before the London Open, which kind of gets you somewhere in this time frame. Okay? Ideally, when it's at this psychological level, 50% retracement with time of day, ideally, it's overbought wanting to fall, which is what you use oscillators for. Okay? All of those conditions existed. Reasonable opportunity to sell in there. Okay? But what if you weren't in front of your charts right at that moment? All was lost? No, because this is called a second chance. Okay? That's the second chance after the London Open. So now let's go from a 15-minute chart into a 5-minute chart. There's the original entry pre-London. London Open comes down like a ton of bricks. Retraces. Okay? But you have to decide, are you a bull or a bear? Well, a bear would look for a retracement. Notice how this time it kicks off the 382 of the larger fractal that we measured, yesterday's trading range. Okay? But the way to do this is you would set it up with its own Fibonacci retracement. What's the sweet spot? somewhere between the 382 and 618 Fibonacci retracement, right? So here to here to here. Okay. So you have a 382 of the higher fractal, a 618 of the lower fractal. Okay. After a bearish engulfing candle on the London Open, on a bearish engulfing candle of yesterday's trading range. That's the fractal geometry. Okay. It fibbed on an hourly, it fibbed on a 15, it fibbed on a 5, with time of day mixed in. To say differently, you shorted in a bearish trend on a retracement. In this case, it went, you sold when price was rising in a downtrend. Not crazy, right? How about Aussie? Aussie dollar has a high correlation, doesn't it? Okay. Notice all these different factors coming in. My favorite time of day for trading is pre-London, especially if you're going to swing trade. Okay. So, oh, this is going to get complicated. You can see here that, yeah, you can see here I got a couple of different trade plans going on in a higher fractal. I don't want to mess any of that up. Okay. Let's take this in a different time frame then. And let's do 15-minute chart. Okay. See the big drop yesterday? You would fib that as a daily bearish engulfing candle. You want to sell somewhere between the 382 and 618 Fibonacci retracement if you're a bear, right? Not just the TET level, but also ideally around the London Open, which would be approximately kind of in this zone. It's actually farther over. I mean, this actual move is the London Open, right? That's, I don't know, it's almost exactly London Open. Okay? Drop into a smaller time frame now. There's the actual open. Here's your second chance. Down, 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 up, up, sell. Again, just like the Kiwi, it started on the 50% retracement and gave you a second chance off the 382, and you would have it channeled this way. You say, well, but, look, there's only buts here if you didn't decide if you're a bull or a bear in advance. Okay? Being a bear on the Aussie dollar should be fairly straightforward. You say, why, Wayne? What kind of hardcore analysis have you done to have a bearish outlook for the Aussie dollar? I say, well, let's see. It fell all of last year. But let's do some fundamental analysis, because that's only technical. The governor of the Reserve Bank of Australia, the guy that controls the value of the Aussie dollar, says it's worth 75. Well, hey, what are we doing at 82? If he says it's worth 75, what are you doing at 82? Probably setting up a bearish trade plan, right? So it dropped like a ton of bricks yesterday. Okay, now you got your 50% retracement. Do it again. This time on a 15-minute fractal, and now here on a 5-minute fractal, second chance should be coming up, and you should probably have it channeled down like this. The only scary part is we're technically at a bottom here, not far from the New York Open, but I would still have it channeled, right? Take the current high, this is only a 5-minute chart, but you take the high that occurred on the 50% retracement, connected to this high, project it to the next high, which should actually be about there. And then you notice that it's right around the midpoint psych level. So, all right, set it up, knock it down. When I trade with price action, I take past support and make it future resistance. Same trade, two different currency pairs. All I'm doing is buying. Okay. Let's try euro dollar. Let me know if I'm going too fast. Please ask questions. Feel free to ask questions. That's why I'm here. Okay. Let's try it here. Okay. You take yesterday's high, yesterday's low, and what I would have done here is set this up to fall. As you know, somewhere between this 382 and 618. Did we get that? No. That was a pretty good opportunity to sell. That was a pretty good opportunity to sell. That was an opportunity to sell. Was it perfect? No. Did it go up a little higher? It did go up a little higher to grab the weekly central. But, you know, conditions here for selling. Yeah. Conditions were there. The question is, did you sell, let's say, here at the London Open, traded it off of this resistance, or did you trade it here? Okay. The safest is, just like we saw in the other two current pairs, sell the second chance. Now, if you sold the first likely opportunity, overbought at obvious resistance, near a midpoint cycle level, just below weekly central, at price action resistance, in a falling market where fundamentally the euro is weakening and fundamentally the dollar is strengthening. I mean, it's not a crazy short. It did make a higher high. But if you shorted, let's say, around 1845, right? 118.45. Let's just call it 118.50. Should you be freaking out if it goes all the way up to 1857? Can you stomach being down 10 pips? The answer is no, you're overleveraged and you're hurting yourself. You need to focus on the long term, not getting rich on this one particular trade. I think if you looked at time of day, fundamental, you know, let's say central banking policies, technical using, everything, technical using pivots, technical using price action, technical using some moving averages, oscillators, like whatever your analysis is, there's a lot of reason to be bearish at the time of day, which is very important too. Time of day, which is pre-London. I think shorting here, because we hadn't made a higher high yet, is really logical. And it came up for a while and then went down, then came up, gave you a second chance. Or if you're on a 5-minute chart, a scalp opportunity. Okay, what happened? Went from the top down to previous lower high, right? In a falling market though, right? In a falling market. See, that's the thing. You have to look at your charts ahead of time and say, it's a falling market. I'm a bear. I'm going to sell it. You have to have intent before you even look at your charts. I have intent. Then you look at your charts, you're like, whoa, right off the weekly, whoa, right, a fib thing, whoa, this is a huge lower high on a higher time frame. And then a huge bearish engulfing candle, you know, again, on a higher time frame, it'd be one large candle, right at the London Open, creating a lower high off of a pivot, off of a fib, off of a lower high, and a short opportunity there. Okay? What I don't want you to do is, if you're bearish, to buy it. So what do you do now? Right? Well, just rinse and repeat. If it comes up to here, could be a new opportunity to resell. Let's find some resistance on this. Let's go to a 15-minute chart. Okay? Where do you see support? Well, look at this trade plan that we have here. Okay. Now what? Finally hit. Kind of double bottoming on a double bottom. Could come up here, come down. Could. Or it's already started the journey. See, that's also, I believe, a daily pivot point. Somebody's playing that. Right? What else is going on here? Psych level. So, right, what about down, up, and down? Make you feel emotionally. Time of day, basically pre-New York Open, right? I would, if I was doing that though, I would be scalping it. Okay, because this is pretty close to support, right? Support is a green zone. And I feel uncomfortable selling right at support. So if I was going to do it, I would have to be scalping. Right? 5-minute high cycle. You guys like to scalp? Oh, went right through that, huh? Yeah. All right. Thank you. Do you guys like to scalp? Yeah, Frank likes it. Cool. Well, like I said, you easily could have had this set up as the beginning of a bearish move today. Look at, right? Selling opportunity in here. It's not the best in the world. It diverged before falling, but you had about a 50% off of reversal. Again, it wasn't a smooth trade, but it probably didn't go against you enough to knock you out. But look when you finally did get a bearish engulfing candle, right? Do you guys remember a video yesterday in our strategy session? I said to trade British pound early in the week. Right? So euro is highly correlated to it as well. Okay. Well, Harvey says it hasn't tried scalping because it's over trading. It can be, but it doesn't have to be. Okay. So in this case, here we go. It always comes down to intent, Frank. I like to scalp. I like to spot. I like to swing. I like to carry. I like to build positions. They're all one and the same. There isn't a one that's better than the other. They fit in different market conditions, or they have different intent behind them. So, for example, around 9:13 in the morning, New York time, I like to be in a trade based on implied volatility occurring at the open of the U.S. equity market. Okay, that's just a volatility trade. So somewhere between 8:55 and 9:13, very often I'm looking for a trade on a short-term time frame. Okay, and I call that a front run. I'm front running the open. So as the wave of money starts coming in at 9:30, when the S&P 500 opens, I'm already in a trade, and if I got it right, it carries me for a while. Okay, that's intent. If I'm trading a news event, now that's a it's an event-driven high volatility strategy. Okay, it's not the same as a front run. They're two different volatility plays, but one's event-driven based on news, and the other one's event-driven based on a market open. Okay. I like to swing through the European session, which means somewhere around 1:30 in the morning, New York time, I like to be in a trade that I'm going to hold overnight while I snore. Okay. And that's going to swing. And my intent there is to catch the vast majority of an average daily range because I'm going to be in it for a good part of the day. If I can catch that on a trend, then that swing trade could last 3 or 4 days. Okay? So I might enter it as a spot trade and let it run for 2 or 3 days like a swing. On other ones, they're closer to scalps. And then so on and so forth. Like there's different strategies at different times for different reasons. I trade the different markets accordingly. They all have different masks, as I like to say. I don't do the same thing over and over and over again. And that's where a lot of new traders get caught, where they trade the Euro USD every single time. They always have a 30 pip stop, no matter what the market conditions are. And they have no bias. They're buying and selling. They're swinging both ways like a broken gate. So that ends up not working. So then they start trying different strategies. Hey, let's use some of this. Let's use that. Let's use this indicator. Let's try that idea. And they're right. And they're expecting, consistency. And they're expecting to build confidence out of success. But they're trying a little of everything and doing nothing well at it. And then you say, well, how's your trade journal going? Oh, I don't keep a trade journal. Well, how do you know your strengths and weaknesses as a trader? Oh, well, I really don't do any of that. Well, have fun. and professional traders call that a liquidity event. Someone on the trade's going to lose money, but it ain't going to be me because I did the hard work, right? So let's just simplify things as much as possible. And also having intent is incredibly important. Okay? I have a bias. I'm going to trade in the direction of the bias. If I'm a bear, I'm going to sell high at resistance in the direction of my bias. Sometimes I scalp into it. Sometimes I spot into it. Sometimes I have to adjust along the way. But it's the market condition change, but not my behavior. I adjust to market conditions, but I'm not like in the middle of my trading trying something new. Right? What time do I open my charts at the beginning of the day? You know what? I think I know what you're asking. The answer to your actual question is my charts are always open. I have 18 screens, probably 100 charts open. I'm in front of my computer at least 10 hours a day, but I'm always looking at the charts. So, I look at the charts, then have dinner, come back, look at the charts, then play with my kids, then look at the charts, and then it's the bedtime routine. And then look at the charts, watch some TV, and drink a glass of wine with my wife. Then look at the charts, go to bed, wake up, look at the charts. I mean, that's the honest answer. Now, how about time of day for trading? That might be another thing that you're implying with the question, right? I like, for example, with intent. I like to trade the Asian session if there's a news event, like Aussie jobs report. We talked about that yesterday, I believe. One of my favorite events to trade. Or Shanghai Open. But those are scalp events. Shanghai Open can give you 20, 25 pips and then fizzle out. But at least I know what time of day it's going to be. Or, you don't always get Aussie jobs report. It only occurs once a month, but I know when it is. So those are like event-driven strategies, right? One's sort of a scalp, like I said before, and the other one is more of a market open. But they're a little different than the New York Open. It's the Asia Open. They're there. Best time of day, my humble opinion, is the pre-London Open. Okay, if you're on the Eastern time zone of the United States, that's exactly 1:30 in the morning. And at 1:30 in the morning, my intent is to swing. Sometimes, more like midnight, but it doesn't matter. It's before the London opens. And I say to myself a couple of things. Let's use it as an example now. Time of day would be, midnight is kind of in here. Okay, for me. Okay, I say two things. I'm looking to carry something at least overnight, but maybe 2 or 3 days if I can. So I'm going to have to enter as a spot. Wait, and by spot I mean a 15-minute chart. But the intent is to let it run for 2 or 3 days if I can, because I'm trading in the direction of what I consider the prevailing trend. So this could easily be open for 2 or 3 days. See, like a swing trade should give you 300 pips. I'd be very disappointed if it turned out otherwise. I'm trading in the direction of the trend. The whole planet's selling euro. Okay, so that's my intent. Now, time of day is midnight, so I go to my chart and I say, okay, I'm bearish euro USD. I was bearish yesterday. I'm bearish today. I'm bearish tomorrow. I'm bearish next week. I'm bearish next month. I'm probably bearish the rest of the year based on fundamentals, unless fundamentals change. And then I will have to adjust. Okay? Fine. Time of day, midnight, I go to my charts. I'm a bear. And then I see we've already had yesterday. Let me get rid of the one click. Okay. Yesterday's high, yesterday's low. I like to fib the range and all that kind of stuff. Okay. Yada, yada, yada. But now we're up here. It's a little early for the trade, but I need to go to bed. I mean, it happens, right? So I'm looking at here, do I have reasonable resistance? I see this as reasonable resistance. I see it as a role reversal. Okay? And here we are now pre-London. So I feel like I'm in the zone. 15-minute chart, right? That's my spot chart. I look at the oscillators and I say, is it overbought? Yeah, it's pretty good. If it was down here, I'd say, ooh, this could go up many more hours. And I may back off. Okay? Then I look, what's my second opportunity as resistance? I see a weekly, all that kind of stuff. And it's a swing trade. So I might risk 100 pips on this. Maybe only 50. Depends on how I feel. So I look at it and say, well, what does 50 pips buy me? So, if you're here at 1850, 50 pips puts it 19. Okay? 100 pips gets me 1950. So that's a lot of room to breathe. You say, well, Wayne, 100 pips is a lot. Well, that's one average daily range for the euro, roughly. So, it gives me lots of room to breathe. And if I'm more than an average daily range wrong, then I certainly don't want to be short anymore. I could get out if it makes a higher high. So I could have my stop a little closer. So, make a decision, right? So your stop could just be up here, at 1880. So you're only risking 30 pips, right? Whatever. What's the upside here? I think this could hold for 2 or 3 days. That's my intent, right? So I go into the pre-London. I got reasonable conditions, a reasonable setup with reasonable reward at exactly the time of day. But I've made most of the hardest part of this decision-making process I've made before I even open the chart, based on fundamental and technical analysis. Then I set it all up tactically, and I might just pull the trigger in here, maybe on that bearish engulfing candle, drop a stop, go to bed. I've done my best trading while sleeping. Okay? Now a scalp and a front run and all that kind of stuff, that's fine and dandy in the right conditions. And you'd be surprised, 20 pips here, 20 pips there, they help. But the best trading would be pre-London, with a good time of day, with good technical analysis, trading in the direction of the trend, and letting your winners run. I was mentoring someone, I think it was last month, he said something, astounding. He said, Wayne, these 300 pip winners, they really help out. I'm like, yeah. But he's like, it was like a mental breakthrough. But you'd never done it before. And he's like, my winners were like 50 pips. I'm like, yeah, but so let's measure. When you're right, maybe they're worth more than 50 pips. So let's measure using scientific methodology. We'll measure, and then we'll test. We'll test moving your limit from 50 pips to 150, and then we'll move it to 300. Right? Let's test, then measure the results and make some adjustments and find out. And he's like, yeah, well, so he would always get out of his winners at 50 pips. He was so happy. I'm like, 50 pips? This euro just dropped 2,500 pips, and you're taking 50 at a time. So let's keep your trading exactly the same. Let's just move your limit a little more, and let's see if it's worth 150. Turns out it was worth, on average, 100. We tried way to 300. Very often it didn't get there, and it came back and and got knocked out on the break even or something. So we just did some basic adjustments, but then we started finding out these 150 to 300 pip winners were important to his success. It was important to profitability. Astounding. Right? You don't have to be a rocket surgeon, but it really helps. So that's my long answer, Lou, about when do I do the time open the charts at the beginning of the day. I'm translating to that, when do you set up sort of your trade of the day? That would be it. Pre-London, I'm going to spot my way into a swing trade. Yeah, pound is going up. Yeah, let's go into that one. Okay, let's go back into that one because it has just gone a little too high, right? So one thing that you could do is just, is take a walk if it's too high. Okay, you don't have to trade it, right? I'm a little surprised it got above here. And I only say surprised because I'm a bear. Okay. The next one would be kind of here, right? Do you want this to go to 52? Well, it poses some problems technically. Because now we're probably going to do this, right? And, the other one I'm going to add in here in the future is going to, oops. Is that poses a problem. Yeah. I'm more interested in selling this closer to 52, 152.000 psych level, which is the top one. And then I fear we're range bound. I prefer to trend just because you get paid more when you're right. But I'd look at this and I would probably create a range trading strategy around it. And I would use oscillators. But sometimes, you got to know when to hold them and know when to fold them. If you wanted this to go down, it's not behaving exactly the way you'd hope, right? So, I don't know, maybe go find something better to do. Oscillator here on the hour says it wants to go up. The way it's playing out, target might be 200, but remember it's a moving target. Target's coming down. Looks like it wants to go to 52. I'm probably going to ignore it. I'd probably sell it at 52. But let's find something better to do. That's all. Look, you got a lot of currency pairs out there, right? Is this the one you have to trade? No, not really, right? So let's take a look. British pound ripper strong right now. Euro ripper weak. Franc ripper weak. Japanese yen neutral. US dollar very strong. Aussie dollar is actually moderately strong. Kitty CAD very strong. New Zealand dollar very weak. CAD strong, huh? It's amazing. Yeah. Come back on the euro, or I mean on the kitty CAD. I'm not ready to drink that Kool-Aid, but somebody's selling it off $1.20, right? You guys trade USD CAD? You do the loonie? Yeah. Very interesting scenario here, right? Look at the weekly. Weekly tells me long. What does that say to you? I'm not bullish euro. That's just technical analysis, right? Doesn't it feel that way? Up into the kind of this zone? Yeah. Hey, and I was raised in Canada, and I remember the Canadian dollar being worth 50 cents, like my whole childhood, which was like the 1820s. Well, it was 80. So anyways, I look at this weekly, and well, that's what I see is there's some upside here. But that doesn't mean I'm trading that, right? On the smaller time frame, could be interesting from here. Okay, area to worry about is this. And then for buying, if you're a bull, and as a bear, the sell zone is here. Looks like we already had that. That trade already occurred, huh? Let's do another one. Let's zoom in. I'm going to use my spidey senses. No, no, sorry, that's my bionic eye. All right. Yeah. Sell the next 5-minute cycle, maybe, if you're scalping. See, the spot's already occurred a couple of times, right? Down, 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 up, up, sell, down, 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 up, sell, down, 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 down. I guess on the 5-minute, I'm just waiting for the next up to sell. In the hourly chart, it's the target, the 618. The 1618 puts us down to, I'd say, what, 40, 50 for the next buy. Because on this time frame, the price action is this way. Down, 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 down. Well, actually, it's the other way, right? Let's do it this way. Up, 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 up. Down, down. Up, 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 up. Down, down. So a bull would be preparing for the up, 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 up. And you're like, wow, there's two things going on there. Well, pick one. Are you a bull or a bear? I'm going to drill that home, my friend. It's probably the most important thing as a currency trader. Mostly because if you've made the decision being a bull or a bear, the biggest thing it does is help you lose less money. because you end up managing your trades better because you know when to hold them and know when to fold them. You're a bear. It just made a higher high. You're still in it? Really? Why would you be in it if it just made a higher high and you're a bear? How about if you're a bear and it made a lower low? Set up the lower high. I mean, it's probably the most important thing. And I've coached people for many, many, many years, and I get this every so often. I get, a trader will say, "Hey, sounds all good and fine and dandy, but I don't know anything about fundamentals, right? And I'm not confident in my technicals. So how do you do it? Flip a coin. You will be better off. I don't care if you're wrong. I want you to manage your risk accordingly. Because being wrong is relatively normal as a trader. If you've been doing this for 10 years, guess what? You're going to be wrong a lot. But it's knowing when your trade isn't working out based on your analysis. Knowing that you're wrong is much more important than being right. Because you got to know when to fold them. Or on some days, we looked at that pound dollar and it's a little too high for me, but not quite high enough to the next level. Just when do you walk away? Well, I looked at it, I'm like, there's got to be something better than pound dollar. Next. Triage, right? Got lots of variables out there. Triage. Ask yourself, is it easy? Is it easy, pips? If it looks like hard work, find something else to do, right? So flip a coin, and if it turns out it says bear, but today's a bullish day, well, you're not going to get too many opportunities to trade. I don't think you'll get the setups. If you're wrong, if you're a bull on a bearish day, you're just not going to get too many opportunities to buy. Sure, you'll touch support. You're not going to get like reversal patterns and triggers. It'll just blow through it. So when you're wrong, based on your analysis, when your analysis is wrong and you're actually setting up your trade plans and actually having the patience to look for triggers, okay, even on days when you're wrong, you're going to sit there and just do nothing the whole day. None of your entries are going to be hit. And you'll sit there and say, wow, this was a tough day. I was wrong. Well, at least I didn't lose any money. Or if you pull the trigger, you buy at support, and let's say it's a little bounce at support, and you're a bull. Even though it's a bearish day, it might, if it's real support, real psych level, something like that, nice confluence of pivots, it might go up for a little while and then collapse on you and make a lower low. Oh, well, move your stop, get out. I mean, okay, so you take a 10, 12, 5 pip loss. Shouldn't be the end of your trading career, and you just move on. And a bad day when you're completely wrong should be you sat around, waited, and did nothing all day, or you took a couple of small wins or a couple of small losses, but it didn't add up to anything. That's why it's important, guys. Not so you can make more money, so you can manage your risk. If you don't know if you're a bull or a bear, I don't know how you can manage your risk, nor do I know how you would set up a trade plan. So pick one. I don't care if you flip a coin. It's probably the most important thing for you to do. Are you a bull or a bear on the Euro USD? Just, again, I don't care what your answer is, make a decision. Use fundamental analysis, use technical analysis of long-term charts, use the migration patterns of African elephants, use the lunar cycle, use British crop circles if you have to. I don't care what it is, make a decision. And then let's trade it. Right? Yeah. So you got to stand for something or you'll fall for anything. The charts are going to lie to you, right? It's because of confirmation bias. You ever read Friedrich Nietzsche in college? You like existentialism? Right? Nietzsche said, perception creates reality. You're going to see what you want to see. So at least know what you want to see, or you'll just fall for anything, right? You'll just be all over the place. How many times have you pulled the trigger and 3.5 minutes later, you want to do the exact opposite? Have you ever done that? Planned out a trade, you wait for it for like an hour, and you pull the trigger, 3 minutes later, you're like, oh, I should have probably gone the other way. Hey, come on, don't you lie to me. We've all done it. Oh, I shouldn't have done that. Right? After an hour, just, oh, no. Boom. Oh, I shouldn't have done that. You know, make a decision. That's called a bias. It's called a strategy. Okay? Strategy. Wrote a whole book on it, Strategic and Tactical Forex Trading. Develop a strategy first and foremost using anything you want, including flipping a coin. You'll be better off by doing it. And then the second one is, let's create a tactical trade plan. If you're a bear, let's sell at resistance. Let's use price action. Let's use pivot points. We'll use oscillators to measure overbought and oversold conditions. Let's sell high at resistance when it's overbought in a down market and watch it fall. You can scalp into a spot into a swing into position. All's good in the hood. Without the bias, you're going to be all over the place, and you're going to see the market go bullish to bearish to bullish to bearish to bullish to bearish. And the reason for that is because you don't even know what you want to see. You don't know if you're a bull or a bear, so sometimes it's going to look bullish, and then it's immediately going to turn bearish, and you're like, oh, I should have did this, oh, I should have did that. And that's what the overtrading is, right? Somebody said earlier, scalping is interesting, but they're worried about the overtrading. Well, the overtrading is you're trading both ways like a broken gate. Now, when you're scalping, that doesn't mean you have to be long and short, long and short, long and short. I don't tend to do that. Okay, what I tend to do on scalping is I ask myself, am I a bull or a bear? What's the fundamentals? What's the prevailing trend? And if I'm a bear, most of the time I'm only scalping down. So now I'm just picking where my levels of resistance are. Very often it's price action. Very often it's psych levels. Very often it's, big pivots. And then I'll drop into like a 5 chart and I'll use an oscillator or something like that. And I just, boom, sell it, down, 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 out. Up, sell it, down, 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 out. Up, sell it, down, 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 down. And that's more of the way that I would scalp. Overtrading is you wait 2 hours to sell, then you sell, and then you immediately want to go long, and so you bail on it. So then you go long. And like you knew in the first place, it went up and collapsed on you. So then you're like, oh, I knew it the whole time. I should be bearish. So then you get out of your long, you go back short, and then, you're just a complete mess. That's overtrading. You can make 100 trades a day and not overtrade. You can make 4 trades in a day and overtrade. The difference is your intent, your plan, your strategy, your bias. If you don't have any of that, you're just a mess. And probably 1 trade is overtrading. You're just a liquidity event for someone with a trade plan. Hey, someone's got to pay for your mortgage. Might as well be the other guy on your trade that doesn't have a trade plan, right? I want to point this out. Look how close we got to the psych level of 120. We didn't touch 120, but we did hit the reversal pivots, and the market's reversing. Okay? One way to build confidence in your analysis is to recognize things like this and say, I believe market participants are using weekly pivot points. So that next time you get an opportunity at a weekly pivot point, you have the confidence to take the shot. This is USD CAD. Last week's reversal pivot. This week's reversal pivot. Coincidence? You think the market really liked 1878? You think the market really loved 1988? Think there's like an 88 fetish, right? 1888 and 1988? Or was it the pivot points? You know, floor traders use pivot points. So where it all started. It's a market sentiment gauge. The thing is, these guys that have been trading on the floor for like 20 or 30 or 40 years. I know a guy that trades a 10-year T-note in Chicago. He's been doing it for many, many years. Pivot points are important to everybody. But these guys that trade Forex, a lot of the professionals started out commodities. They use pivot points. Now the big thing is, hedge funds using algorithms and stuff, right? Your algo traders, right? We're using MetaTrader. You use EAs, right? It's not complicated to program a pivot point into the computer and say these are areas of opportunity or areas of risk, right? So again, what you need to do is build confidence in your analysis so that when you make a trade plan, you execute your trade plan. And then you manage your risk, right? So you do things like this, or you should do things like this all the time. Anytime you can build confidence, you should do it. And I see stuff like this and I say, you know what? Whoever's trading USD CAD uses pivot points. I'm glad I use pivot points too. Okay. Pivot points theory says if weekly M2 is the bottom, weekly M4 is the top. If the central pivot point's the bottom, R2 is the top. Okay, came up, hit R2, stopped. Nice, done. Next. Also, very often if you do this early in the week, and it looks like we hit right in the middle on Monday, and then we topped out on Tuesday, by Friday, we very often, I'm not saying it will, and it's not the, let's say, the long-term strategy, but every so often you'll find that by Friday we will touch the weekly. I don't know if it does or if it goes down. Again, that's not part of the analysis. It's just often it can come back and touch the weekly again if it hits the target too early, because basically everyone gets out and it comes back. Okay, good. Let's see. Let's go through the market quickly. I'm going down in the burning ring of fire. Go down, 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 and the flames get higher, and it burns, burns, burns. All right. Let's take a look at gold. Okay, I believe yesterday's trade plan was long. Can anybody confirm that? I believe we were up here looking for a retracement back into what used to be resistance is now support. And I think I said long somewhere between 25 and 50. Can anybody confirm that? Yes, Jim just confirmed it, up to 2050. And then my analysis is telling me if it gets up into here, this spot where we are, somewhere between 25 and 50, that then we come back down this way. I think I said up $25, down $50. Is that right? Yeah. Thank you, Jim. Jim confirmed it. Good. You're welcome. So anyways, we're up there. I wouldn't be a buyer here anymore. Too much risk. So maybe over the next 24 to 48, or 24 to 36 hours might go short. We'll see how it plays out. If I get a reversal pattern at resistance, I might actually do it. Okay. This goes back to last week when oil was retesting 50 from the bottom. Okay, and I believe we talked about this yesterday as well. The target is what, 44 and 42 or something like that in a second. Can anybody confirm that? Right? We still have fib. This is the actual analysis that we did. Yep. Jim says yes. Wyatt says yes. Aaron says yes. Cool. Let me zoom in a little bit. Okay. And the 382 predicts a 1618, which I have is 42 and a half-ish. Cool. So $6 on oil already. Might be a couple more bucks, but then I'd be worried about it. Okay. What do you think it's going to do? Go down to 35? Who knows? But, you know, $5 or $6 in your pocket, that's not bad. S&P 500. Okay. Notice here that we're at the 618 Fibonacci retracement. I was really hoping this 382 would work out. It started for a little while. Hopefully you got some profit. Is this another one? Well, we got to be careful, don't we? Do 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 do. Do 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 do. So, technically wouldn't be bullish. Okay, if you're a bull, you bought down here, and now you're on your hands and knees praying. What I'd like to see as a bull would be this. Okay, exactly the same price as now, but I can't buy it now. We're at resistance. I'd like to see a higher high, not higher than this high, but higher than that low, and then I'd like a retracement and retest the channel, but not as resistance as support, and long and gone. Same trade, same price, significantly less risk. What do you stink? Smell like a plan? Okay, pound yen. This one's been frustrating. Yeah, maybe for obvious reasons. See, I'm caught between a rock and a hard place on a lot of these yens, right? So fundamentally, I want the yen to weaken, but I know we're stuck in seasonality. And you never know when it's going to end, so you got to keep buying dips and jamming stops. Again, you know, probably a good opportunity to tiptoe in with binaries and stuff. Okay. Now, one thing you could have played here is the psych level of 180, right? Right. You see that? We got all the way to 95. Could have put a binary on it. Oh, well, we're at 63 now. Too little, right? Okay, so like I said, if you were going to scalp, Sell high off resistance. What? See, I look at the pound yen. We call it the beast. We call it the widowmaker. There's a lot. The spread's high. It moves fast. The volatility can be dramatic. Could be the perfect thing to binary scalp on instead of a spot. But the only thing is, you'll make a lot more money on the spot trade than the binary. So it depends. If you can stomach the volatility, it could work out. Okay. So it just depends. It might just be a pure scalp where you say to yourself, when you get to the psych level here, you drop it and that's it. Because you know it could do this on it, right? So on the Widowmaker, you could take a big beating here, especially if you're not committed. You could change your mind really quickly. Or with the binary, you just say, in the next hour or so, whatever you choose, whatever binary you say, the psychological level of 1800 is a great place to short. It's been going up, but yen is strong seasonality wise. British pound's just generally weak. Whatever, and you take the shot and you take a walk. You don't need a stop because it's built in. And you treat it as a scalp and nothing more. And you just throw it down and move on to the next trade, right? So using this analysis here on the 1 minute chart, hang on, what do I see? Why would I scalp this? Can I get this all set? Okay, what's going on here? Massive psych level, 618 Fibonacci retracement. Okay, that's based on yes high, yesterday's low, and it's come up 618. That's where we are on the higher time frame here. So there's a confluence, and if your fundamental bias was bearish anyways, seems like you'd be short that, my friend. Okay, and if you're not short that, a couple of things might have happened. One, you're not fundamentally bearish, or B, you don't have a trading plan. Okay. Careful in here because now it's dropped 40 pips. We're due for either retracement or reversal. That would be, psst, hey, if you're a bull, set up a trade plan. Okay. Hey guys, I got to go. Thank you to Traders Way. Thank you to you guys. Thank you for your loyalty. I hope to see you again tomorrow. Will you be here? Okay. Hey, please open a live account, fund it with some money, and let's do some trading, huh? Yeah. I'll do whatever I can to help. I'll do whatever I can, not just to tell, but to teach. We appreciate your loyalty, but mostly Traders Way is hoping that loyalty turns into a live account with real trading, and we all hope that your trading is successful and something that you can turn into a career, not just for days and weeks, but for many years to come. So peace on earth, may the be with you, may your profits be above average. Cheers.